Good morning, good afternoon, good evening, wherever you are in the world. Welcome to the Rice and Cannoli podcast. I am Rice.
And I am Cannoli.
And for those of you who are watching on YouTube, please make sure you give us a thumbs up and subscribe. If you're listening on Apple Podcasts or anywhere else you get your podcasts, share an episode with a friend. That'd be really helpful for us. So let's get into it. Jim, how are you doing today?
I'm a little sad today. A couple follow-ups, I guess, from topics we've covered in past episodes. The first, from our very latest episode, LeBron James will no longer be joining the podcast.
Well, he still could. He still could.
I don't know. So
he can do it remotely.
For those who aren't following as closely, he signed a veteran minimum contract to join the Philadelphia 76ers. Ring chaser. What does that pay? That pays a cool $4 million. Now, well, you know.
But he probably gets bonuses and stuff too, or?
No, because they don't have the cap space. At this point, they're, I think, just relegated to vet minimums. And then your years of service, I think, plays into how much that actually equates to. So he's on the high end of that. But considering, despite his age, how much money he could actually get from a team, like he left a lot of money on the table potentially.
But he's already got tons of money, right? Like, that guy's worth hundreds of millions of dollars, right?
He is, but if you were following the prediction markets all summer long, Philly was never really at the top of the leaderboard. It was usually Golden State, Cleveland, Miami got in there for a minute. Philly was never more than like in the teens at best in terms of percentage. So,
dude,
what do you
maybe
think
LeBron's
the odds are?
doing insider trade. Maybe LeBron's doing insider trading on poly markets.
If not him, because that would be too easy to track. You know, his inner circle,
his homies.
Someone had to have.
Bronny, his son.
Hey, he's still on the Lakers. He didn't. He's not following Pops. Yeah, but I would bet that somebody, because
there's no way
the ones manipulating this whole thing. Yeah, they were manipulating this whole thing through the press all summer, and of course it's like, well, if the one that we know we're going to go to is locked in our minds, let's find a way to squash that and keep that towards the bottom of the betting odds until the last minute. Boom.
That's funny.
Yeah. And then one more follow-up. I think, might have been our second episode, we talked about Flock, everybody's favorite cameras. Well, it's not, well, I don't know that it's Flock or not. However, my wife, recently coming home, got a little notice in the mail. I'm not going to show it because it has personal info. It's from the city of Oakland.
Oh, jeez. What was your wife doing?
Might have been driving a little bit over the speed limit, but nothing outrageous.
Okay.
Mind you, like, I don't know when you're driving, especially when you were in the U.S. previously, but I would venture to say most people are always driving like somewhere between 5 to 10 miles an hour over the speed limit, depending on if they're on streets or freeway. Just fine. Never get a ticket. It's just kind of the thing that people, it's like an unspoken rule. It's like, oh, as long as you adhere to that, the cops won't get you.
And I think the cops also just give you that 5 to 10 mile an hour leeway as well, like, because it's kind of not worth it for them to pull you over.
Mm-hmm. Well, not anymore. At least not in Oakland.
Oh, geez.
Let me read. The city of Oakland is dedicated to reducing the number of collisions, injuries, and fatalities associated with speeding. Speeding is one of the main causes of severe injuries and fatalities. That's why the city of Oakland has implemented an automated speed enforcement program to monitor
These are
and
traffic
enforce.
Cameras.
Well, you know how intersections, like at the traffic lights, they've had cameras to catch, red light runners.
Yeah.
This is not that. This is not at a traffic light.
Okay.
And to enforce speeding at various locations pursuant to California Vehicle Code 22426. In accordance with state law, the program is issuing warning notices for a vehicle's first violation. I'm going to skip over some of the specific content. This is a courtesy warning notice. Your vehicle was identified by a camera traveling over the speed limit. There is no penalty with this notice. No response is needed. Future violations captured by the automated speed enforcement cameras can result in a notice of violation, which carries a monetary penalty. And
so this is a cash cow.
And there are screenshots, so I can see my wife's car in the middle of a road with there's no cars in either of the lane next to her, and there's none coming the opposite way of traffic. So the street's pretty empty from what I'm looking at right now. And they took a picture of the back of the car, the license plate. It looks a little wobbly. And then from a zoomed out view of the street, looking down. So where could those cameras be getting that angle, first of all? And then you think of these flock stories that have emerged this year. And it's like,
using this for surveillance, basically.
Yeah,
but they also need to, I imagine there needs to be some sort of laser or radar thing to detect your wife speeding, though, right?
I mean, yeah. Unless the system of cameras together are able to piece that information together.
Yeah.
Maybe. I don't know. Just the fact that this is a thing, brand new, because, I mean, we've driven in and out of Oakland a number of times over the years. This is madness. And apparently it's rolling out to other cities in the Bay Area.
Great.
So pretty soon,
fantastic,
everywhere you go, the cameras are going to be watching.
You live in a surveillance state, Jim.
Yeah, it's funny because when you read some of these flock stories, like I feel like I've been pretty insulated from what I read, and this is the first time where it's like, oh, there's some camera nonsense happening right here in my own backyard. Yeah,
that is
scary.
Pretty wild, though.
It is. Like, I can see why. I wonder if this was voted on or if this is something the city just did. I'd have to look that up. But in Oakland, I guess I could see why a population there might want more surveillance and, police presence, because Oakland is not necessarily the best reputation. At the same time, though, when you see these other cities that don't have problems as much copying that, is it really for safety?
I see these. So this, I think there's like a lot of studies that have been done around these like speed cameras and things of that nature that essentially it doesn't actually reduce the dangers of driving, I suppose is probably the best way to put it. And if anything, these are just cash cows for the police department.
Yeah. I'm assuming it goes to the police and it's not to
because
city general
the thing
budget.
Is like these you don't get demerits on these ones, on these violations. It's just a monetary fine because they can't prove that you were driving the car, because you could lend your car to a friend and that could be the argument, like, well, I wasn't driving the car. So they never give you demerits. So this is literally just a cash cow.
Yeah. Well,
because there's no deterrence other than the monetary value, I guess.
Well, the thing is, who's it really gonna be stopping? Do you think people breaking the law really care? fact, there's probably a number of stolen cars going through the town.
Yeah, probably, but they're probably going the speed limit because they stole the car.
Yeah. So how's the cameras going to help that? Meanwhile, you have all the people that are law-abiding that are probably going to get bit by this stupidly. Especially, look, it's like there's nobody on the street in this photo.
Yeah,
it's just her car.
They actually just like photoshopped all the other cars out.
Yeah, those are actually AI generated images.
Yeah.
Although we laugh, but you know what? What if?
Yeah. Oh my God. Right.
That. Yeah. Anyways, I thought this was a very interesting kind of follow up that hit a little close to home. So.
Well, the good news is it's just a warning.
It is, but still, it's like, well, because you know what that's gonna make me think? Avoid Oakland unless absolutely necessary.
Which you probably should have been doing anyway.
I mean, there are certain. No, I know where you're angling at. There's still some like interesting places to visit that are reasonably safe. It just depends on where you're going in the city. But
right.
Now there is extra incentive to avoid Oakland. Good job. First, you scare off all our sports teams. Now you're going to scare off all the law-abiding citizens.
Man? Like I always wondered about that. Like, how can Oakland be such a crap city that they lost all their sports teams essentially?
It's sad because, I mean, you have some pretty historic teams.
Yeah, the A's, man, the A's,
Warriors. It's just like
the Warriors.
Even the Raiders. As much as I'm not a Raiders fan.
Yeah,
you still can't deny their legacy and their impact on the NFL. So how you botched all three, it's just
all of them.
Insane. All of them. Yeah, the city is, I mean, obviously been mismanaged for a long time.
Right.
But yeah, I don't know. I don't know what they're gonna do. They're just gonna keep doing more camera crap like this to try to make up revenue.
We have all these empty stadiums now, right?
Yeah. Well, they do things like
tearing them down.
Well, for example, like they'll do like Monster Jam or something, or concerts.
Oh, great.
So there's still events that happen in those locations, and I guess you could do that year round. So in terms of the making your money back on the real estate part of it, I think they're still finding a way, but yeah,
it's just unfortunate.
It is. Anywho, well, I think you had some interesting topic that you wanted to bring up today. Which might also become unfortunate if things don't break the right way.
Well, speaking of mismanagement, I ran across this article from I think it's Nikkei, and essentially the high level is that there are the 5 big hyperscalers owe $1.65 trillion in debt that isn't actually showing up on their balance sheets. So I thought that was really interesting.
That not showing up. Okay, how does that not show up on a balance sheet?
So they kind of go into this a little bit. I can walk us through it as well. But like, there's a few other interesting data points, like just top line interesting data points as well. So, the reported debt is bigger. So that the hidden debt actually is 122% of their reported debt. So this is even higher than their actual debt that's showing up on their books. And in the last 4 years,
so is that cumulative?
Yeah. Okay. Across and then in the last 4 years, this total has grown by 8x.
Oh,
the total debt. Yeah.
That can't be good.
Yeah. So so I guess this is the thing, right? Like, and we can maybe like get into it a little bit here, but I guess like this is technically legal because they report them as footnotes, but they don't report them on their own balance sheet. So, like, I don't know.
Footnotes.
When I say this to you, what is the first thing that comes to mind?
First thing I'm thinking is, what kind of BS is happening here? Wait, hold on. What do you mean by footnote?
We can get into this now, I guess. And I think there's like a few, perhaps, terms maybe that we need to also like just let our audience know about, because I think some of this is like very, nerdy financial people stuff.
This will be great because I somehow was able to go through all of my education without having to take an econ class. Thank you, California education.
Amazing.
So I'm excited for this.
Yeah. So, I mean, we all know what a balance sheet is. Off balance sheet is this is that hidden debt that I was telling you about. Mm-hmm. These are real obligations that don't show up in their liabilities yet. And they use like footnotes basically at the bottom of their filing to say like, oh, hey, like there's these other stuff that we have to do, right? So, for example, like you would say it's your company, right? And you entered into one of these agreements. You might say, oh yeah, like since this building hasn't been built yet, we technically don't have any liabilities yet, but I'll just put it in a footnote here to say like in the future I will owe this to whoever that owns this debt. And how they do this is actually they're using these special purpose vehicles, SPVs. And essentially these are separate little companies that are created per project. And these companies then go and borrow the money and they actually go and own the building. And then the tech giant like Meta or whatever will then sign the lease with the or long-term contract actually with these SPVs, but then they will argue that the SPV's debt isn't their debt because they haven't, built these data centers yet.
Sounds like a shell company.
Well, what's interesting is the SPVs are the ones that go and apply for the loans, right? They're the ones who go and get the debt. But then like they only have one single tenant, right? And that's Meta or Alphabet or whoever.
Do we know what kind of formation these vehicles are?
They're LLCs.
They're LLCs?
Yeah.
Okay.
Yeah. So
just taking notes.
yeah. So and then the other kind of like, I guess like trickery they use is like this idea behind like the lease commencement. So they basically push these leases out like several years, and essentially until the lease commences, none of this stuff shows up on their balance sheet.
Which is different than like thinking of it in startup terms. There's ARR, right? Yeah. But as far as what you've actually realized, but this sounds a little bit different than that, right? Because you can have ARR on your books even if the money hasn't come in.
Yeah.
Much like this, but this is you're saying is not even on the books.
It's kind of like a gray. It's a footnote.
It sort of is and sort of isn't.
Yeah, but it doesn't show up as their liabilities, right? So it makes their balance sheet look significantly better than it actually is, right? So where it becomes, in my opinion, a bit of a problem is most retail investors are probably not going through all the footnotes of every single company's gap filings, right? And so they're making assessments on these companies based on like the top line numbers, right? That you would kind of see on the first page of the gap report, the gap filing rather. So I think that's where it becomes a problem, right? Is like you're going to have a lot of retail investors that aren't kind of digging into the minutia of this stuff, and they're kind of missing a whole bunch of information that they should be aware of.
Interesting. So if they're able to kind of kick the can down the road with this,
Yeah.
are they able to abandon that without repercussion before it starts to actually hit the books?
Technically, no,
officially?
I guess. Like, technically, no, right? Because these are like commitments they've made. And this is where some of these these circular financing deals are also kind of all part of this. Like, all of that is also part of this, right? Because you know how NVIDIA essentially invests in OpenAI, and then OpenAI commits to buying $1 billion worth of GPUs from NVIDIA, right? And then OpenAI also commits to spending X number of billions of dollars for compute at an Oracle data center. So it's all this weird kind of just strange accounting things that are going on, I feel like. But
I think it has been reported numerous times over the past year about things don't seem to square when you do the math. But I think this is interesting because this is like the mechanics of why somebody would say that.
Yeah. This is kind of like, inside baseball, I guess.
Yeah. Interesting.
So the three big things that make up this debt are the data center leases. So they've signed them, but these have not been built yet. Purchase commitments for chips and servers that are not yet delivered, and then exposure to the JVs and SPVs that borrow to build these data centers, right? So that's what that 1.65 trillion is kind of made of. And I need to stress, right, like this is not like some weird. Some people are drawing the comparisons to Enron. I don't think it's like that, because they are they are reporting it, right? They are disclosing this, but it's just in their footnotes. And if you were really into this stuff, you would be able to find this, right? Like, they're not hiding it or anything. Like, it's kind of out in the open, but it's kind of this weird, I guess, like, gray area, right? Because I guess under US accounting rules, like, as long as those the data center leases that haven't started, the chipset that haven't delivered, none of that actually has to sit on your balance sheet until either the building opens or the goods arrive.
Yeah, and I think in one of our past episodes that for 2026, half of the scheduled data center contracts got canceled in the U.S.
Yeah, I remember this.
So, assuming those are falling into this bucket, those just roll off the footnotes? They're no longer there?
Yeah, what happens? I honestly don't know how. I don't know how those get treated, to be honest.
That'd be something interesting to dig into, because I guess if the money never changed hands, because I'm assuming
like a commitment to buy.
If it's just paper, that's like, yeah, we will buy this, wink, wink, and then never happens. If the money never changed hands.
However, the thing is, these SPVs go and get those loans.
Right. Ooh.
Right. They take on these loans, right?
Now the SPVs, they're just these independent little entities. They're not like publicly traded companies
kind of deals, yeah.
And so, I guess those loans just could default potentially, and nobody gets in trouble because it's an SPV.
Yeah, I mean, like, that's also speaking of defaulting on loans. I don't know if you saw that Oracle's debt has been degraded down to just one level above junk bonds.
Yes. Was that Moody's that downgraded?
Yeah, Moody's did that. Yeah.
Yeah. Oh
So
man, I'm laughing because Oracle somehow has had some staying power uh, in the tech world,
for a very
despite
long
the fact
time.
that a very long
But they
time.
just buy a bunch of shit, right? Like they're just buying a bunch of shit.
Yeah, yeah, interesting. I also think it's insane that these are the tricks that you get to play when you have the kind of money and access that like our little startups don't have. Like, are you gonna tomorrow go try to start a special purpose vehicle for your startup?
I don't even know what it is. I don't even know what these are.
I don't think most people do. I don't. Most people don't. I bet if I went to like the family barbecue next week or something and talked about it, nobody's gonna know what that is.
No, they would probably think you were talking about a car. They'll be like, "Oh, is that the new self-driving car?"
The Honda SPV.
Yeah, yeah, exactly, right.
Yeah,
So,
interesting.
but it's kind of it's crazy, right? Like, so I think the other thing from that article that came up was that basically capex has been exploding, right, on this AI stuff, and historically companies paid for everything out of their own cash flow
Mm-hmm.
when it comes to capex, but now they're running basically close to 100% of their operating cash flow. So they've gone to borrowing all this money.
Yeah. In fact, I have an article here that was a little shocking. Maybe I'll pull that up.
Yeah.
Uh, I think you already mentioned that about Oracle, but I have another big player that burned cash for the first time ever. It is none other than Google.
Yeah.
I want to dig into this for a second because I
Yeah.
found this to be.
Let's get into
I
this.
was actually not aware of some of this information. So, Alphabet reported blowout earnings while revealing that it burned cash in the quarter for the first time on record. Now, they've been around for a bit, so that's surprising. The most dependable cash machine in corporate history now spends more on AI infrastructure than what it generates across its entire business, according to Alphabet's latest earnings release. And their cash flow for Q2 of 2026 was a negative 5.9 billion.
Oh my God.
Which is, if you look at the previous quarter, a positive 10.1 billion. That is roughly 15 billion decrease into the red in one quarter.
That is unbelievable, dude.
That's bonkers. The Google
And this
parent
is
reported
Google, man. This is the
Google.
company that prints money.
So the Google parent reported negative 5.9 billion in free cash flow for the quarter, down from 10.1 billion and from 24.5 billion 3 quarters ago. So they're rapidly going into the red.
That is so crazy.
Yeah.
Wow.
Unsurprisingly, capital expenditures doubled year over year to 44.9 billion as AI infrastructure investments ramped up. Alphabet appears to be financing itself like a utility. They raised 49.6 billion in stock in June of 2026. They sold 20.3 billion of senior notes and doubled long-term debt to almost 100 billion in 6 months. That's a lot of debt.
You know what this feels like to me?
What is that?
It feels like these tech giants just don't know what to do, and they're trying to find that next win, and they feel like AI is where it's at. Like that's what it feels like, because it's all these like look at like it's Google, it's Meta, it's Oracle, right? Like these companies that are, at this point, in their life cycle, they should just be these kind of blue chip stocks that, earn decent returns, and, it's becomes boring. But I feel like because these guys are tech companies, they can't operate in that way, I guess. Maybe I'm
I think
wrong.
it's all about the shareholder value. You got to
Yeah.
keep getting that shareholder value. If you're
Yeah, I
not
guess
growing,
everyone's
what are you
used to
doing?
everyone's used to the, triple digit returns, I guess.
Now, this is the interesting part, because now if you actually look at their core business, check this out. The company reported 112.1 billion in net income for the quarter. That's a lot of money.
It's a
That's the
lot of cheddar.
largest quarterly profit ever, and about 77 billion of it came from unrealized gains on equity stakes in Anthropic and SpaceX.
Great.
The underlying business, too, continues to smash records on all fronts. Revenue rose 24% to 119.8 billion. Google Cloud grew 82% to 24.8 billion. Quick note on that. I hate GCP. Not that like AWS and Azure are much better, but all these guys using the product, it's always a pain in the butt to navigate. I just wanted to throw that out there for
Dude,
fellow devs out there.
is GCP is the most non-user friendly interface like I've ever seen in my life.
Oh, it's terrible.
Yep.
I hate it. I dread going in there I mean, we don't use that at our startup, except for one or two minor things, but that's the thing, right? To try to find my way back to those minor things it's like finding a needle in a haystack. I hate it.
Such a pain.
Yeah. Let's see. Cloud operating income tripled to 8.8 billion. Search hit 63.3 billion, slightly below estimates, and I have to assume AI is the culprit there for it going a little down. But that's still pretty good. Like, that's a lot of billions.
It's many billions.
The stock traded flat immediately after the earnings release, which could be a sign that Wall Street is willing to swallow the negative free cash flow so long as the rest of the business keeps humming.
I also saw that for the first time since kind of this AI craze, that the hyperscalers that are increasing their capex on this stuff actually are seeing a hit on their stock price. Because in the past few years, like every time so and so would announce, we're going to spend $1 trillion on capex, you would see a corresponding jump in the stock price. But this time was the first time I think I saw that like stock prices started actually declining after they announced that they were going to do all this big capex spending.
Yeah, I think that'll be a trend to watch over the coming quarters. Like, is this just a blip? Or are they going to find a way to correct itself? I think if it doesn't correct itself, that's not good either. That's probably a canary in the coal mine. But yeah, I thought this was worth a share, and I don't think Alphabet here is alone in this pattern. I believe Meta also is burning cash flow as well.
Yeah, they are. Yeah, from what I understand.
Yeah. So, and for the longest time, these big tech players were considered infallible, loaded with money. And now you see patterns like this, and you have to wonder what's going to happen if the AI bubble pops. Because obviously it's not going to help them, but there's going to be a fallout effect for everybody else too.
100%.
It's going to spread like a contagion.
Well, the big scary one to me actually is actually OpenAI. I think OpenAI is a massive single point of failure that can happen because they've committed what's it, over $1 trillion across of spend, right? Across a bunch of different companies, right? So like I think 250 billion to Azure, 300 billion to Oracle, 140 billion I think to AWS, and then 100 billion for Nvidia, and 350 billion I think for Broadcom, and then there's like some AMD and stuff. And here's the kicker. So they've committed to spending $1 trillion. Do you have any idea what OpenAI's revenues are?
First of all, $1 trillion. I don't think people can truly wrap their brain around
It's
how
insane.
much money
we've talked
that
about
number
this, yeah.
actually is. But I cannot guess what that number is. What is it?
So the estimated revenue for OpenAI, this is going to shock you, is nowhere near $1 trillion.
It's not.
They're roughly $20 to $25 billion. And
yikes.
Yeah. And they're expected to continue to lose money like crazy, right, for the next 5 years. And yeah, so I don't know, like to me, like this is so, I don't want to be like a doomer or whatever, but it's alarming, right? That like this, because this one company essentially could take us all down. And I mean, Sam Altman has talked about this before too in interviews where he's just like, essentially he's like, yeah, we need to just be too big to fail, and then like taxpayers are going to come and save us.
Of course, more bailouts, right? Except of big banks, it's big AI.
Yeah, but you know, like this actually, you bring up a good point, right? These bailouts. I remember, like, I was quite young, obviously, in 2008. But I remember thinking about this, and I was just like, yo, you know what? Like, I thought like America was about survival of the fittest, right? If your company did well, did good things, you would succeed. If it didn't do well, you die, right? And it just always felt so strange to me that like, no, we're gonna take all this taxpayer money to prop up these banks that were doing objectively evil shit, right? Like clearly, right, there were people that were doing terrible things. And like because I think the counter argument was like, oh, we can't let these guys, like, if all of these banks fail, it will take down the entire financial system or whatever, right? And I remember thinking about this, and I still think about this a lot. That
maybe it needed to be taken down.
Yes, it needed to be taken down. And the second thing is, like, if the fear was like, oh my god, it's the economy is going to tank and this and that, like, instead of giving the money to these banks, would it not have been better to just give the money to the people?
That would be too logical. That's too logical. You can't do that. Give money to the people instead of these giant institutions? No, right. You can't do that. That's nonsense.
Like it was crazy to me, but I mean, I guess here we are again.
Arguably, this will be worse if it pops. Things are so leveraged. And so, okay, we're talking about, the mechanics of where things are at. So I have another article here of what kind of money do they need to see in terms of revenue to try to justify this?
This was the JP Morgan report, right?
JP Morgan of all institutions calls out AI spend, says $650 billion annual revenue is required to deliver a mere 10% return on AI build out. And let me get to the meat of this.
This is in perpetuity. That's the thing that's important. 650 billion in perpetuity will deliver 10%.
Yeah, so the report suggests the industry needs that $650 billion in annual revenue to deliver a 10% return on investment, which I guess I think we'd be pretty happy if we had a consistent 10% return on anything. But,
Yeah.
AI is supposed to take us to the promised land. It's just a 10% return on investment that companies are expected. I mean, isn't the S&P 500 like, if you just stick with that over the years, that's like what? Anywhere from 7 to 12%, depending on the year. So how is that really that much better? Anyways, so yeah, to get a 10% return on investments that companies are expected to make through 2030, the report equates this to an extra monthly recurring payment of $34.72 from every iPhone user, or $180 from every Netflix subscriber. In perpetuity, I think, is the key thing, as you mentioned. Although this may sound attainable, you must consider there are about 1.5 billion active iPhone users across the globe and more than 300 million paid Netflix subscribers. So let me ask you, would you pay either of those amounts to keep the party going out of your own pocket every month?
I can barely afford Itchy Bound noodles, man.
Can we pay OpenAI and noodles? I mean, if LeBron turned it down, I got to think Sam Altman's going to turn that down.
Yeah, he's probably, the guy who drives a Koenigsegg is probably going to turn it down.
Yeah. And I'm not a Netflix subscriber, so I guess I'm not on the hook for that $180.
You and me both. I am not a Netflix subscriber. I'm not a Disney Plus subscriber. I'm
temporarily a Disney Plus subscriber. I gotta get my X-Men fill. I'm a whore for nostalgia.
Fair enough.
And also because it's $4.99 for 3 months, and then I'm gonna cancel.
Nice. I love it.
But I digress. So the report suggests AI growth won't be constant, and it might experience the same issue that plagued the telecom industry when it first started building fiber infrastructure. The path from here to there will not just be up and to the right, says the report. Our biggest fear would be a repeat of the telecom and fiber build-out experience, where the revenue curve failed to materialize at a pace that justified continued investment. Although OpenAI has reportedly already achieved a $20 billion annualized revenue run rate, and Anthropic is eyeing $26 billion in revenue by 2026, these are just reports or targets by individual companies and haven't translated into net profits just yet.
And here's the other problem with this. So, yes, there was massive overinvestment in fiber in the early days of the internet, because it basically was like we were going to onboard 100x new people every 6 months or something like that, right? Now, that certainly was silly, and it didn't make a lot of sense at that time, I suppose. But the good thing about that stuff is, fiber doesn't go obsolete, right? So like this stuff is now being used. Like now we are using all this capacity, right? Like all the fiber that's available there. The problem I see, like, because I think some people are also making this argument, well, like, oh, like in the future, people can just use this compute capacity, even if we don't use it now. I think there's a huge misconception actually with this thinking, because these are not fiber cables in the ground that last hundreds of years, right? These are GPUs, right, which have a useful life of 3 to 5 years before becoming obsolete. But then the bonds that they're issuing to fund this stuff is between 5 and 20 years, right? So you're going to be paying off this loan by the time this shit is obsolete, right? And in some cases, right, like they're pre-buying all these GPUs from NVIDIA. So then you have all these, like, just like a stockpile of GPUs just sitting around doing nothing for a few years, however long it takes to build these data centers. And by the time your data center comes online, if it ever does, your shit's obsolete.
And then what do you do with the building?
Yeah,
what do you do with the
Manhattan-sized buildings?
I mean, I don't know. You turn it into housing, maybe like the old. Like, actually, funny. Speaking of Oakland, like there's one like old brick building along the freeway that they converted into, I think, condos. And I know that's kind of a popular thing that has been done in various metros. So why not just do something similar? For those that don't make it.
Yeah.
Would you what would you, let's say they found a way to do that? Would you live in one of those if it was like a bargain?
I mean, as long as like they got rid of all the servers and everything that makes data centers horrible,
Or
why not? I suppose.
they go hybrid. They turn half the building into like residence for people, but in exchange for a very, very cheap lease for your unit, you have to spend X amount of time a week training the models in the data center.
Oh, God. That sounds horrific. This is like my nightmare.
You know, someone at one of these large companies is coming up with these insane
someone
ideas.
is thinking up this plan right now. Someone is hatching this plan.
Maybe I need to stop giving these ideas.
Yeah, Jesus. Let's like think of the most dystopian thing, and then like let's do that. Oh,
the ultimate
man.
Matrix scenario.
So, bringing us back to this $1.65 trillion in hidden debt. I think there's a few things that I'm gonna keep an eye out over the next 6 to 24 months, so that we can be prepared. Right. I think obviously, earnings season is super important, right? So are we seeing AI revenue growth keep pace with the jump in CapEx? If revenue is accelerating and spend starts to taper off, then maybe we're in a good place. We got to look at free cash flows, probably. I think, right, of these big hyperscalers like the Meta.
We just got a sneak peek of one of them. Yikes!
We got to look at the lease commencements, right? So like these are signed but not live. So we got to watch as these kind of come live. Are they actually then being moved on to the balance sheets of these hyperscalers? If Oracle's credit gets degraded towards junk, I think that's a huge problem. And
you know what though? Didn't the U.S. got downgraded? A couple times over the last few years, right? And we're still around fine. What's the problem?
Yeah. What's the problem?
What's the problem?
What's the problem, man? I think we're only at $40 trillion in national debt or something like that, right?
Mm-hmm. No, that's all? That's nothing.
That's just paper money.
Maybe the U.S. needs a special purpose vehicle.
Yeah, I think they do. They probably do. And I think the last thing that I would keep my eye out on is OpenAI's revenue and fundraising, right? Just because, like I said, they are just this huge linchpin that is a massive problem, right? And I think by all accounts, they're going to need a fresh injection of capital by 2027, right? So I think we just need to keep an eye out on what their run rate looks like, how much money they're raising, right? How much money they're trying to raise, and that'll also give us a pretty good indicator of the health of what's going on in our economy, man.
Well, fingers crossed, I suppose. It's funny because you have a lot of people rooting for the AI bubble to pop, but yes. I don't think people understand how bad that would actually get, not just for these companies, but for everybody. We shall see, I suppose. How much do you think the average person follows everything you just laid out?
I think the average bear is not following any of this stuff, which is, in my opinion, I feel like we need more people to actually realize this, right? Because the reality is, like, even if you are a super conservative investor and you only invest in index funds, you're exposed to this. Like, that's that's a fact, right? So you should still be kind of aware of
I
this
think
hidden debt.
a large percentage of the S&P 500 companies are exposed to this. So
Yeah,
I think it would drag down the entire index.
100%.
And think about not just like traders, but your 401ks out there.
The pension funds, all that stuff, dude.
Everybody that's retired already
Yeah,
is at risk, whether they know it or not, or whether they want it or not. And the interesting thing is, okay, what do you do with your money? If you were in that situation, because this is something I've kind of thought about before, and I don't have an answer. But if you look at interest rates, what are we? They haven't really moved in a bit. Nothing substantial. So you could put all your money in, like, a money market fund, something that's considered stable,
safe.
The return isn't amazing, but that's not why you're putting it there. But then, depending on the unemployment situation, if things are getting more dire with more layoffs happening every month, they can't raise interest rates. But then if they don't raise them, and in fact, if they lower them again, well, now that you're continuing to get less of a return on investment in a money market fund.
And you're going to pump inflation through the roof.
Correct. So it's like damned if you do, damned if you don't. It's very interesting. So I think that's why a lot of people view something like crypto or gold or silver as a safe haven in advance of a pop.
Gold and silver are probably safe havens. I'm still not sure about crypto. Like, I just don't. There's no utility, in my opinion. Still,
my philosophy is that governments won't allow crypto to flourish if they don't have control over it, and they will fight. And they will fight physically to ensure that stays the case.
Yeah.
I like the idea of crypto.
The idea
on
was
paper.
nice. Yeah.
I just think it's not gonna go down the way people think. And that exactly. You will have to fight for that to materialize that way. Gold, I know the market has been manipulated for a long time, that the real value of gold should actually be much higher and has been suppressed.
So how are they? Whoa, this I want to hear about this a bit.
Gold is meant to be the safe haven, and silver's kind of slept on a little bit more. But
silver's the poor man's gold.
But I think silver is always a way to go. But the problem with that is it's not an investment you're making to make returns. It's meant for
it's just a store of
stability
value.
as inflation roils everything else, including the dollar. So how much of your portfolio are you really going to stick in gold and silver? Because what if that, pop never comes? Or maybe it comes and it's not as bad as people thinking, and it's just a short-term blip. And if you put a heavy percentage of your portfolio into gold and silver, well, you just lost out on a ton of potential earnings by not keeping it in quote-unquote riskier assets. So it's tricky. I think diversify. It's always been a word thrown around ever since I was young. Diversify, and just try to be smart about staying within your means.
Yes, I think staying within your means is probably the most underrated advice that I've gotten as a teenager when I first got my first credit card.
Mm-hmm.
Because I don't know, like the thing with credit cards, it's so strange, right? Because it doesn't feel like you're spending your own money, and I think that's how a lot of people get in trouble. But anyway,
Yeah.
Jim,
Well,
I
I
need
have one.
I need
I
a I
have
need
one.
a I need a palate cleanser. I need a good news story before saying goodbye
Perfect.
to you today.
We're in mind meld mode right now. Yeah. Um, in the effort to try to end on a more positive note with the podcast every week, I particularly like small business wins and stories, things that make you feel good that there is still hope left for humanity despite the craziness. And I don't know why. It's South Carolina again. Surprise, surprise. Maybe maybe we need
Something in the
to go
water.
out there and check out what's going on in South Carolina. So we have South Carolina restaurant owner finds $12,000 in an old cabinet and returns it to the former owner.
That's amazing.
That is,
Wow, that is
look at that stack.
fantastic.
Look at those stack of bills right there.
Yeah, that's like a fat stack.
Do you know how many people would just pocket that, especially in the economy today?
I imagine most.
Yeah, yeah. Because it's cash, so you can't
Yeah,
even
you can't
track
trace
it. And then first of all, what's that former owner doing that you're just leaving
why does
that
he
much
have a
money?
stack
How do you
of
forget that?
just so much money? Like,
yeah, let's read into this a little bit. So, South Carolina restaurateur is being hailed as a good Samaritan after he helped return $12,000 found in a sunglasses case to the store's former proprietor on June 20th. NBC first spoke to Sak Ying Juntek. I'm probably butchering that. Who owns lemongrass, Vietnamese, pho, and Thai cuisine in Myrtle Beach, South Carolina, about the shock of finding the stash in an old cabinet and his attempts to return the money to its rightful owner. The money was very thick, he tells today.com.
yeah,
I can
don't
imagine
say
$12,000 is
in
even in
cash.
$100 increments is very thick. Back on New Year's Day, a neighboring wholesale furniture gallery caught fire with the origin traced to an electrical room, causing several businesses, including his, to lose power for months. He said that when the power was restored earlier this month, he used the opportunity to deal with some furniture left behind by previous tenants. 2 cabinets that belonged to the previous owner. Kind of junk. We have to put it in the back. So
there's a picture of it.
Kind of explains how he even got into the cabinets to begin with. While cleaning out one of the cabinets that had been sitting outside, he spotted a sunglasses case and decided to be a little nosy. I saw the case, and then, of course, when you see something like that, you want to open and look. Adding that there was a stack of $100 bills filling the case to the brim. I'm kind of surprised that fits in a sunglasses case.
What is the previous owner doing? This is so shady. Like, just to stuff 12 grand in a sunglass case?
maybe that was their hedge against the AI bubble.
This is like their version of putting the money in under their mattress.
Mm-hmm. Yeah, except instead of a mattress, it's sunglasses cases. That's the downside of this strategy, I suppose. Don't lose it.
Oh my god, that's hilarious.
I was so shocked, he says. I knew right then that it belonged to the previous owner. And he says he had difficulty reaching him because the number he had was disconnected. But while on air, he remembered he had another number for the owner, and says the relief in the "oh my god" heard on the other end of the line was palpable. He says the news was particularly timely because the previous owner had been dealing with a serious and costly health battle.
Oh, wow. Of course. I thought this was supposed to be a good news story, Jim. You ruined it.
Wait a minute now. Hold on. He says that people around Myrtle Beach have recognized him and let him know he did a good deed. The post office girl said, "Hey, that's my boy. I saw you on the news. You did the right thing." And while he's surprised by the attention he's getting for his kindness, he hopes his actions can inspire others. I just want to say, do the right thing. Don't give up honesty. And I would say that's a happy. I mean, if someone's going through a health battle, I mean,
And
health.
then suddenly get 12K.
A huge number of people have gone bankrupt over medical bills in the U.S. So suddenly stumbling upon $12,000, I'm sure
So it's
had to.
$12,000 that some insurance companies is going to be able to take from you.
Oh, now, yeah, now that it's in the news.
God.
They never did. Well, hold on. They didn't disclose the owner's name, so
so maybe they don't know. Who
plausible deniability. But that's, I mean, the current owner giving that back. I mean,
that is awesome. That's
amazing.
Really amazing. I think that it's reading stories, hearing stories like this help me restore my faith in humanity.
It truly does. I mean,
because he certainly didn't have to do that.
No, and I know how many people would just pocket it.
Yeah.
Like I bet, because what if it wasn't at the shop? It was just somewhere randomly on the street. And you found a sunglass case, like laying on the sidewalk, $12,000. How many people are just and let's say there's nobody around, so there's no one that could immediately. Oh, did you drop this? Most people would just be like, I'm just gonna keep that, and
I'll just take this.
So I hope that positive karma comes that owner's way, because that's the kind of behavior and mentality that the world needs more of. And something, frankly, that the Sam Altmans of the world need to embrace a little bit more. Mm-hmm.
Very cool. Well, Jim, as always, it is great catching up with you.
Likewise, my friend.
And we'll catch you guys all in the next episode.
Peace.
Bye.